Namaskar viewers, this side is Dr. Amrit Kant and I welcome you all in my YouTube channel which is related to the economics, finance and the political economy. So I welcome you all for this video series analysis. So here we are going to discuss and talk about a very comprehensive and sophisticated and very relevant issues pertaining to the Indian economy, and all of you are aware of the fall of Indian stock market. Right, so why Indian stock market is falling is one of the instrumental and relevant questions which must be rumbling in our mind. So if you want to find out a very sophisticated, concise and clear answer about the fall of Indian stock market, you are in the right place, because this is the YouTube channel that I'm preparing, which I have created, is basically devoting towards the issues related to economics, finance and political economy. As an economist, as a researcher, as a professor of economics, I will only make a video and will tackle the issues related to economic finance and the political economy. I'm not going to take other issues which is beyond my specialization. So if you want to get a very comprehensive idea related to economic and financial issues, you are in the right platform. So before going ahead, let me tell you what actually we are going to understand after watching this entire video. I have classified this video into three different parts. The first part, this video, we will be learning, we will be understanding the key and the fundamental factors which is leading to the fall of Indian stock market. Secondly, we will understand about the future outlook of the Indian stock market. After this, what will happen to the Indian stock market? Because that is another very important questions which must be coming in your mind. And finally, at the end of this video, we will understand as a retail investor, as an analyst, what we can do. How can we take the advantage of the situation which has emerged right now in Indian financial system? So before going ahead, let me look at the statistics and the fact and figure about the fall of Indian stock market, which will definitely help you to comprehend the entire scenario. If we look at the last 1 month figure and the statistics of the Sensex, it has plunged by 5.5%. The market capitalization of all listed companies on BSE, Bombay Stock Exchange, has fallen by 5.8 lakh crore, reaching to the value of 387.3 lakh crore. So we can understand how drastic this fall in the Indian stock market. On the other hand, if you will look at the statistics of the Nifty 50 index, it has broken below the level of 22,000 level of support. So this bearish trend is really drastic. We are witnessing the fall down for last 6 months, but this 1 month fall down is really significant. So come to the point, why the Indian stock market is showing the bearish trend. So there are 5 different factors, my viewers, which we have to understand, which is directly leading to the fall of Indian stock market. First important factor is that there is a fear about fall in corporate earning and Indian banks. So because of the fall, there is expectations that the corporate earning will fall in the subsequent quarter. This ultimately creating a negative sentiment among the DII, domestic institutional investors, among the FIIs and among the retail investors. So nobody willing to put their money at this moment in the Indian stock market. So we will only invest when we think that the company is doing well, the company is progressing, the company is showing some positivity in their earning growth. The investors are electing to put their money in the Indian stock market. So if they are not putting their money, it is not providing the support, and therefore the market is continuously going down and down. Now, the second important factor is the DII, the domestic institutional investors, has stuck at the higher level. If you will look at the trend of the Indian stock market, it was around the level of 86,000, right, in the month of September around. right? So there was a very, the positive and the bullish outlook of the Indian stock market. So what happened? The domestic institutional investors, invested their money at the higher level. And the FIIs, the foreign institutional investors, because they had already earned a very significant amount of money, the profit, they started booking their profit at the higher level. And who were buying at the time when the foreign institutional investors were selling their stock when the market was very high at the level of 86,000 level during the period of September-October period. So it was the domestic investors, it was the domestic institutional investors who bought the share, and the retail investor who bought the share at the high level. So now what is happening when the market is going down because of the high sell-off of the foreign institutional investors, when there is a sell-off by the foreign institutional investors, and therefore there is no demand in the stock market, only there is a sell-off, right? So what is happening? This is leading to the fall of Indian stock market, because we have to understand, whenever there is a sell-off is done by the foreign institutional investors in the market, it is the domestic institutional investors who support the market by creating the demand of the stock. But this time it is not happening. And why it is not happening? Because they have already bought, they have already parked their fund at the higher level. So they are stuck. They are stuck at the higher level, right? And therefore they don't have very much surplus fund, which can be a supportive factor for the Indian stock market, right? So I would say the DII has been in the trap, and therefore it is not giving any support right now to the Indian stock market, and therefore our market is going down and down. Now, the third important factor, which is very important to understand, is which is leading to the fall of Indian stock market, is the rising the yield of United States bond, right? We have to understand that the bond yield and the stock market performance is inversely related to each other. When the bond yield is going up, especially the US bond yield is going up, then the stock market will go down. Why? Because obviously, if I'm the investors, if I'm getting return more and more on the bond, which is one of the safe haven for parking the fund, why should I take the risk by investing in the stock market? So here what is happening in this time, the US bond yield is going down. And why did it happen? Because the Federal Reserve has decreased the interest rate. So when the Federal Reserve has lowered the interest rate, the bond yield is going up and up. So when the US bond yield is going up, it is attracting the investors across the world. And therefore, the FIIs and other investors who earlier used to invest in Indian market, now they are pulling out their money and parking their money to buy the US bond, right? Because the yield, the return of the US bond is attracting, right? It is attractive, and it is attracting more and more investors across the world. So there is high sell-off, which we are witnessing in the Indian stock market, which is leading to the fall of Indian stock market. The FII is shifting their money from India to China. Now, there must be a question why it is happening. Why the foreign institutional investors parking their money from India to China? The reason, there are a lot of reasons, and there are several economic reasons which I would like to tell you. The China is going through the massive reforms. There are a lot of development, there are a lot of structural changes which the Chinese government has done, especially in the field of infrastructure, in field of regulation, in the field of technology, and a lot more things. And the Chinese economy is showing some positive outlook. The Chinese economy is rebounding, right? And the Chinese stock market was in the lower situation, like the situation of the Chinese stock market is low, like the valuation is low, right? So when the valuation of the Chinese stock market is low, it is beneficial for the investors to park their money or to buy the stock where the valuation is low, right? So now what the investors, the FIIs are doing, or all other investors are doing, is that the Indian stock market was in high, they are selling their the stock in the market, and they're parking their money to buy the stocks in the Chinese stock market, which is in low. So now, because they will get more and more benefit, there are dual benefit that they are getting. First, they're selling their stock at the high price in Indian stock market, and finally they are buying the stocks basically at the lower valuations in the Chinese stock market. And because there is a positive trend with the Chinese economy showing, they are expecting that the Chinese stock market would also grow, and then they would get benefiting, right? They would get more and more benefit. So therefore, there is a shifting of money from the fund from Indian stock market to the Chinese stock market, and which is leading to the fall of Indian stock market. This is another important factor which we have to understand. Donald Trump factor, which is we are aware of, right? The emergence of the Donald Trump era has created a geopolitical uncertainty across the world, right? As we know, the Donald Trump policy is very aggressive, and his policy is very clear that his policy is related with the United States. He is looking forward for the United States only, right? So he's a very very deterministic personality, very determined personality. And therefore, he's coming with the aggressive tariff and a lot of policy. So what is happening? This creating this kind of, the policy is creating a trouble, a kind of, the negative sentiment among the investors. The investors are in a panic right now because they don't know what is going to be, what Donald Trump will be doing, what tariff, what policy he will be making, and the sanctions that he will be putting to the China, to the Mexico, to the India. Nobody aware of, right? Because now there is a trade war, there is a tariff war which is going on between China and the United States. So similarly, the investors are also cautious that the same thing may also happen with the India. Right. So therefore, what is happening because of the uncertainty and the geopolitical and the trade uncertainty, the investors becoming too cautious, and they don't want to take the risk by investing in the Indian stock market. So unless until the situations become so comfortable and less volatile, this trend is continuously going on, and therefore the FIIs and other investors are pulling out their fund from the Indian stock market, right? And which is leading to the fall of the Indian stock market. So this is, these are the 5 fundamental factors which directly impacting the Indian stock market, and therefore the Indian stock market is going down and down, right? So this is very sophisticated factors which we have to understand. Apart from that, there are other factors, but these are the prominent economic, financial, and geopolitical factors which is leading to the fall of Indian stock market. Now, after understanding that yes, there is a fall, there is no doubt. Now there must be questions in all of us' mind. What will be the future outlook of the Indian stock market? And all of us must be, contemplating, must be striving to get the answer of this question. Where will this fall stop? And when this, the rebounding of the Indian stock market will start? So let me tell you very frankly, right? The stock market is absolutely uncertain, volatile, right? Nobody can tell you that at this level the stock market will go up and this level it will go down. Nobody can predict, because we have already witnessed during the COVID time. You must have seen that the stock market had gone down, the level of 25,000, 30,000, and then from 25,000, it again rebounded to the 86,000 level. So you can understand that after the COVID period, it surged approximately 4 times, right? Nobody had predicted that it is going to be. So we have to understand that it is absolutely uncertain, and there is no forecasting, 100% forecasting can be done that what will happen, because there are several factors. There are sentimental factors, there are technical factors, there are fundamental factors which impact the behavior and the movement of stock market. So, it based on the various research and the various, study, like which is going on, and they are basically saying, the study report basically tells that the rebound will definitely, it will start. There is no doubt about it. But we have to understand that it will take time to recover, to reach the level of 86,000 or 87,000, which we witnessed in the last year, September 2024. So we cannot be superficial. As an investors, we cannot be superficial that this will happen immediately. Within 2 months or 3 months, we will once again witness that the stock market will reach to the level of 86,000, which is not going to happen. So we will have to wait. We will have to wait, and there are a lot of things which which is done, which has been done by the Indian government, and which is obviously supporting the Indian stock market. Now, there is one positive news which recently came in the Friday itself. The Central Statistical Office, the Government of India, released the data about the GDP growth of Q3. So obviously it rebounded. So our economy grew 6.2%, right? And our chief economic advisor is expecting that in the fourth quarter, in the upcoming quarter, the fourth quarter of financial year 25, our GDP growth could reach to the level of 7.6%. So this is one of the positive outcome in the recent date, in the last day itself, which Indian economy witnessed. So I think these are the factors. Positive outlook of the Indian economy will definitely draw the attentions of the investors, especially the foreign institutional investors, and the market will rebound. And we have also seen that the government has given the tax benefit of approximately 1 lakh crore to flow the fund in the economy to boost the consumption. And it is taking, it will take time that the consumption will enhance, the consumption will increase, and we will see the multiplier effect in Indian economy. The demand will definitely, the aggregate demand in the economy will enhance, but it will take time. Right? It will not going to happen immediately, right? So we have to understand that yes, the time, it will take time, but anyway, it will reach to the mark of 86,000 level, which we have witnessed in the month of September 2024. So we'll have to, wait. There is no doubt we'll have to wait, and it will take some time, maybe, not sure, I cannot say 100% that this time it will, but within 6 to 7 months, we will see the level of Indian stock market will be traveling around, will be ranging around 80 to 83, 84,000 mark. But again, it is not sure at all because it's absolutely uncertain. The best thing about Indian economy is that it is doing well as compared to other growing economy and the emerging economy across the world, right? So we don't need to worry at all. We need to be positive, and we need to just keep wait and watch to the movement of Indian stock market. So yes, there will be recovery. It will take some time. There is no doubt of that. Now, the third important thing which we must be very much fascinating, that as in investors, as in retail investors, because many of you are watching as in investors, as in students, as in retail investors, as an analyst. So this is the pertinent questions which must be in your mind, that what should we do at this moment? As in investors, how can we take the benefit of this situation? Okay, so there are few things definitely which I would like to tell. And this strategy definitely we can adopt right now in this market. So the first thing is that as an investor, we should not be panic, first of all. This is the mantra that we need to always hold in our mind. If you want to sustain, if you want to earn money in the stock market, you don't need to be panic, first of all. If we have invested our money in a good company, which is the fundamentally strong, we not need to worry about it at all. Where the market is heading, it doesn't matter for us. We need to just hold our stock, hold our position wherever we have made. But again, I'm telling you, if we have made investment in the fundamentally strong company, then we not need to worry, because again, it will rebound, right? So the first thing is that don't rush to sell off. Don't go for, panic selling at all, right? And if you have invested in a fundamentally strong company, you not need to worry. So this is the first thing which we need to do. We need to be calm down. We need to watch the market. We need to see the market. So the first thing is that. The second thing is that the question arises, should we invest in this moment? Obviously, we should invest, because this is the right time. The valuations of the Indian stock market is the low, right? Is in the low, right? And it has shown the drastic fall down since for last 6 months itself. So this is the right time. I mean, we can look some fundamentally strong company. We can do various technical analysis, and with the advice of your financial advisor. I'm not suggesting any stock, any sector, not at all. I will not do it, but I would suggest that you can take the consultation of your advisor, and after that you can start investing right now, because this is the time where you can make money. You will buy the stock at the lower level, and when it will rebound, you can earn money. But the problem is that we chase the stock when it is in the top level, right? That is the problem, and we sell off when it is going down because of the panic selling. So this is the time of buying, not the selling. So you can accumulate your stock, we can average, but again, I'm requesting all of you to please do a research analysis. Talk to your advisor before putting any amount of your money into the stock market. So yes, this is the right time of investment. And if you're not very much aware about the technical part of the stock market, you can also have a look. You can also contemplate and think about investing in the mutual fund. You can also start SIP, because this is the right time of doing it. The valuation is low. You will get more amount of a stock what it would if the stock market at the higher level. But now it is good time. So obviously we should invest at this time. If we have the risk taking capability a little bit, if we have surplus fund, we can do that. Right now, other strategy that we can adopt is that we can diversify our portfolio, right? And we not need to put our money in the one stock, right? Because that would lead to the problematic situation for all of us. And we can also for that, again, my suggestion would be, don't invest based on YouTube channel suggestions and some WhatsApp group, university knowledge. Not at all, because it is your money, and you will get benefited. You will have to also be at a loss. So you can invest. You not need to be panic. And the third strategy is that don't think about sell at all, right? If you have invested at fundamentally strong stock, you not need to think about the sell, right? So these are the three strategies I would recommend. The first one is, don't be panic at all. Watch the market, hold your position if you have invested in good company. Number two, if you are planning to invest, definitely this is right time to make the investment. If you are knowledgeable, you can do it. You can do analysis, take your advice of your financial advisor, make the investment, and you can definitely earn some return. And the third strategy would be that don't look forward for the sell. Don't sell off your position right now. Hold it, and you can also look forward for averaging it if it is possible. So these are the strategy we can definitely adopt, and we can earn money in this hard situation, or I would say uncomfortable situation, which is we are witnessing in the Indian stock market. So this is all about, I hope this much be clear, what are the factors and what are the outlook and what strategy we should adopt as an investor, as an analyst, as a researcher to overcome this challenging situation for all of us. So thank you so much for watching this video, and I hope you liked my video. If you have liked my video, please share to your relative, your colleagues and your friends, so that they would also benefit. And most importantly, I need your comment. If you have any questions, any doubt related to the finance, economic and the political economy, any doubt, any questions related to it, please feel free to post your comment. I would definitely give the answer in very concise, clear and very sophisticated way, so that your questions, your doubt would be cleared 100%. This is my guarantee, right? So this is all about. Thank you so much. And also, I'm seeking your suggestions about the other area of other issues of economic finance and the political economics, where I should make my next video. So please give your comment. I will be waiting for your comment for my next video. Take care. Thank you so much. Goodbye. Jai Hind.